A historic day for the market.
The pandemic-era stock market was filled with massive rallies.
Nothing seems to get in the way of the stock market going higher for very long.
And that drove a horde of investors to buy in, hoping to make big money.
A record number of new and novice retail investors jumped into the stock market over the past 2 years. They were trying to figure out as they went, and many of them dabbled into some of the riskier trading strategies.
One of those risky strategies is called options trading. An option is a contract to buy or sell an asset at a future date for a set price. Options activity hit a record high in 2021 with nearly 9.9 billion contracts traded. That was more than 32% higher than the previous record set in 2020.
Options are the kinds of bets where you can lose everything.
You're on social media seeing more and more people talking about these amazing gains that they've gotten. It's not as easy as social media makes it sound.
The appeal for a lot of the retail investors to buy options is that they're much cheaper. But your potential for profit is actually not that high.
Everything that you can trade, options, futures, whatever, they in of themselves are not bad tools. Fire is a wonderful tool. If you don't know how to use it, it's going to end poorly.
So what we've seen with the rise of certain fintech apps, like, for example, Robinhood, it's become increasingly easy for individuals to trade options. It's actually a fairly unregulated area. That's part of the problem.
So why did options activity increase so rapidly in the past year? And what makes trading options so risky?
The whole meme stock phenomenon partly triggered the boom in options trading among retail investors. We're talking about stocks like GameStop and AMC that were popularized on social media by retail investors trying to coordinate trades and squeeze out hedge funds and other short sellers.
One trend that we've been seeing in options over the last year or two is a real focus on the near-term options, 1 to 2 weeks out. That's where we're seeing a higher percentage of the overall volume.
Individuals have often taken to social media to report their gains and profits from highly successful options bets. And that's made it very attractive for first-time traders and those who maybe have invested in more traditional, conventional ways in the past and are now interested in trying something new.
Technology has made trading options much more accessible.
Options have become increasingly popular among individual investors using platforms like Robinhood because they can often yield profits at many more multiples of one's initial investment. Where you might only be making 5 or 10% on your capital when you buy stock. With an option, you can make many, many times your initial investment.
Think back to 10 years ago or 20 years ago. If you wanted to trade an option, you needed to, maybe call up a broker on the phone. You needed to pay a significantly high amount of commission. You didn't see the markets real time. There's much easier access to options markets. And the use of options has pretty much just grown alongside of that.
What some of these apps have done is made it a lot more visual to understand what your profits and maybe even losses are going to be. So that's led to an increased interest in trading options. There's also a sort of addictive component to trading with highly speculative instruments like options. When you make a lot of money, maybe you just get lucky and you make a lot of money, you're inclined to do it again. This is in many ways like casino gambling.
People say take the emotion out of trading. It's very difficult to take the emotion out because it's money. People get emotional about money. What you want to do is make it as robotic as possible, so you take that out of it. How do you do that? By giving appropriate risk on your investments so that they're not eating you up inside.
Most popular trading apps generate a lot of revenue from payment for order flow, and they can make more money from options than regular stock trading. So there is an incentive for them to lure investors into options trading.
I think there's a myth that's carried over from the 1970s where firms just want to churn people up, etc. No, we don't. It's a bad use of our time. It's a bad use of your time. It's why we start everything we talk